Hey guys, hope you and your families are well. Weekly IBD 50 video sponsored by MarketSmith. There's a discounted trial available in the comments below if you are interested. Going to be taking you through some stocks in the IBD 50 list. Primarily, these are focused in three areas where I'm seeing a lot of strength. That is semis, solar, and oil and gas. There is one other kind of wildcard one in there as well. So let's start off with the semiconductor stocks, and we're going to be looking at SMH. This is the large semiconductor ETF, and still looking at this as the possibility of a head and shoulders bottoming pattern. So this being the left shoulder, this being the head here, then this being the right shoulder, so then you'd be looking for a break of the neckline, which you can see it's having a pretty good go at it. The RS line has been turning up. That's nice to show that the group and the stocks are showing some relative strength there. So got this in the back of my mind as well, and then it's about dialing in, trying to find some of the stronger stocks. So ideally, you want to be trading ones that are showing quicker technical strength, ticking many of the CANSLIM criteria as well if you're a follower of the William O'Neill approach, and preferably a bit quicker, higher beta, higher ADR, all of that good stuff. So one that I'm keeping an eye on is LSCC. So first and foremost, RS lines. The blue one is versus the market, then the green one is versus the stocks own industry group. So ideally you want to see those in a healthy uptrend, which I'm seeing. Now, which chart pattern do you see? Well, I see how a cup and handle could be forming here, and we could be potentially in the handle portion of a cup and handle. Now, the red line that you see here, this is the 10-week, so this is closely aligned with the 50-day moving average on the daily chart. So it needs a little bit more work in here. But if this can just continue to tighten, and I'll be drilling it down onto the daily chart and the 1 hour chart to find an entry myself if it sets up. But if this can continue to tighten around its 10-week line, that could look interesting. Want to keep an eye on what are those high quality growth funds doing in the market. Well, one has marginally decreased their position, but another four have actually been either adding to a position and or initiated a position. So certainly you would say that smart money is flowing into this stock. That there is a positive. Ticks many of the CANSLIM boxes. RS lines, we spoke about RS lines. The earnings per share estimates look good with forward guidance up as well. So this one ticking a lot of boxes, like the ROE 38%, earnings share growth rate 60%, comp rating 98. That's where MarketSmith compiles all the data it has on a stock. Gives it a rating 1 terrible, 99 super duper fantastic. So LSCC is one on my radar. Another semi. Newer IPO. This is ALGM. So in terms of the higher quality growth funds, you've got one just keeping their position, one has marginally decreased their position, or if you look back a couple of quarters, you'd say maybe it's a significant decrease of around about 20-25% or so. Estimates look good for guidance up, consistent earnings, consistent sales coming through. So looking for this to potentially form a large IPO base on the weekly chart. So you can see how this is potentially starting to form a large base in here. Now on a short-term basis, you can see these RS lines are turning up nicely. The red line there, the 10-week. So let's take this one down to the daily chart, give you a better understanding of what it is I'm looking for. So we were looking at this as that larger cup and handle type pattern. You could then look at this as a large cup and handle type pattern forming here, and then you could go even shorter. Fractal nature of the market, patterns within patterns. You could then look at this as a potential cup and handle. So what if this is just transition up and out the right hand side of the cup, and now we're going to start to build a handle, which is commonly going to represent a Darvis box, a VCP. So I will be looking for something like this to happen, that volume to be drying up as well. But certainly semiconductors, an area of the market that I'm interested in. WCC, this one here is the wildcard electronic parts. Just think in terms of a basing pattern, looks pretty interesting, doesn't it? You've got strong RS lines versus the market, versus the group, consistent earnings, consistent sales, and see how it's starting to build these high lows. So on the weekly chart, you've got 3 major contractions, 1 in there, 2 in here, if I can draw a line, and then 3 in here like this. So potentially a very sizable base building here. Larger causes tend to lead to large effects. The stock has a history of being able to trend well as well. So this is one I have my eye on it. Ideally, I would rather be targeting those stronger areas of the market and then strong stocks within said areas. So there are stocks higher up on my radar than this one, but certainly for an IBD 50 stock, constructive looking basing pattern. Now I'm going to blabber on about solar. Again, let me go to TAN. I say this, I think, every week. If you haven't watched Tony Seba's YouTube videos on clean energy disruption, watch them. I think it's well worth an hour of your time. So when we look at TAN here, what chart pattern do you see? Well, if I just do it like this, let me draw a couple for you. So you could see this VCP, right? 3 major contractions, 1, and then 2, and then 3, and then consolidating around a lot of key moving averages. That's nice because it's showing that on a kind of shorter term basis, the stock, the group, the industry ETF is not extended. There's potentially a large cause here, so a lot of running room. So it's the context that is important as well. It's not building a large base up here when it's already gone up 300% from $23 to $120, right? It's pulled back down, it's starting to base nicely. Take a look at these RS lines pretty much from when the base started to form. I would say that is a nice healthy uptrend. And then you could also look at this here as a much bigger flag type pattern forming. So this then being the flag here, this then obviously being the flagpole as well. So I think solar looks really interesting. I think a lot of the solar stocks look fairly strong as well. Now, it doesn't happen that you watch Tony Seba's YouTube video on clean energy disruption and then the next day solar stocks are breaking out of bases. It doesn't happen like that. These things take time. But a solar stock that is in the IBD 50 list is SHLS. So what is then interesting about this? And I'll go down onto the daily chart in a minute. Take a look over here. 2 higher quality growth funds have initiated a position in Q4 of 2022. Why are they doing that? Well, they're probably not doing that with the intention to lose money, are they? Again, they're only buying for one reason. They think the price is going to go up, in essence. So what I think is then interesting here, the earnings per share, you've got a breakout year, 2023 estimates being this year, going up 107% with the forward guidance up as well, relatively new in terms of its IPO. Stocks tend to make their biggest move within the first 10 years of their IPO day. So let's go down to the daily chart. I'll show you what I'm looking at a little bit more. So we have a clustering of key moving averages here. We have the pink line, which is the 10 EMA. We have the green line, which is the 21 EMA. And then we have this red line here, which is the 50 SMA. So what I am looking for is the context of a low pivot to set up. So let me just do some wacky drawings and then maybe you'll see what it is I'm talking about. So what I would like to see is volatility to continue to contract. So the VCP is a pattern in and of its own right, but it's a characteristic of a pattern you'll see in cup and handles, in flags, in Davis boxes. So I'm looking for price to get nice and quiet, volume dry out, and then what I call a trigger bar, which is a really tight bar sitting on one or more key moving averages where the volume is dried up, everything just looks really tight, really boring, very little supply coming to the market. So what I will be looking for in coming weeks, coming sessions, is basically this, just tightness like that, and then trying to time a breakout there, and then preferably some of these key moving averages are just underneath it here, so then I could place my initial stop there relatively tight, ideally sub 5%. That is what I'll be looking at. RS line versus the market versus the group has been turning up of late, so yeah, looks like an interesting one. And there's some other strong ones. I'll give you a couple of bonus ones. Here you go. Here's some other ones I'm looking at. Array Technologies is another solar stock, so a bit of VCP action, 1 contraction, 2 contraction. Potentially this is the third contraction underway. We'll see. Obviously it's currently putting in a higher low. It held these key moving averages. Can it now bounce? Can it then tighten up? Something like this, and then be looking to target there. That is how I'm thinking about it. Nice big shakeout. I like to see shakeouts in bases. You can see this shakeout in here as well. Shakeout demand tails. Good to see for solar. As well is another one, a little bit more volatile. I think this one's going to be a little bit harder, but who do you notice has initiated a position in Q4 of 2022? Big old boys, Fidelity. Interesting, isn't it? So let's carry on. So another area of the market that I think is strong is biotech and healthcare related. If I show you IBD from a kind of chart standpoint, let me see how this looks on the weekly. Yeah, you maybe see it. You can see it a little bit more clearly on the daily chart, but the Market Smith charts aren't showing it exactly how I want to show it. But clearly a phase 4 decline, right? But phase 4 declines do not last forever. They eventually turn into phase 1 bases. So what chart pattern do you start to see forming here in the context of a potential phase 1 base? Well, let's count the contractions. That'd be 1 contraction. That would be 2 contractions, and this here, potentially 3 contractions. What chart pattern is that? It's a VCP. Interesting, isn't it? So can this break out of a phase 1 base following this phase 4 decline over here? Now, if you've been looking at the markets for the last couple of months, you'll see biotechs are a really strong area of the market. So I'm thinking IBB, if IBB can really start powering out of here and start making continued higher highs, higher lows, this is decent causality. Look how the volume is dried up. Take a look at this RS line versus the market turning up as well. Looks interesting, doesn't it? So biotechs, key area of focus for me. So Z Labs is one that's coming up on the IBD 50 list. Let me go down to daily chart. It's going to be a little bit hard to see. What if we go down to the 60-minute? Yeah, you can kind of see it on here. So significant gap up with a very strong close, pulls back down. Now what chart pattern do you start to see again? 1 contraction, 2 contractions, and then potentially 3 contractions forming in here. So it's a bit of a flag, bit of a VCP forming. Look how this volume starting to dry up. So I'm just looking for this base duration to increase. For a high tight flag, I like minimum base duration of 3 weeks. Anything else, I like 4 weeks. So just looking for this base duration to increase, but it's certainly starting to look interesting. In the middle of the base, take a look at the strength of some of these bars. Really, really, really strong closes. Now this is obviously on an hourly chart, but I like utilizing the monthly, the weekly, the daily, and also the 1 hour chart. So ZLab is looking pretty interesting to me if it sets up as per my criteria. Another biotech stock is VRTX. So a little bit harder to see this one, but you can see you've got high quality growth funds. You've got 3 of them in there. One increase their position in the most recently reported quarter, and on a shorter term basis, potential cup and handle forming in the low 300s. So see how you pull down here, you hold the 200 SMA being this black line here, and then price bounces up. And now what I'd like to see is tightness holding around that psychological level of $300 as well. You've got a clustering of key moving averages being the 10, 21, and the 50 SMA. Would like to see the volume drying up, maybe earnings in 15 days time at the time of filming is a catalyst. For that, we'll see. Stock has a history of being able to break out and trend okay. Not the cleanest of stocks, certainly in here, chopping around a little bit, but it's a biotech stock on the IBD 50 list, so just watching and waiting. But I think there's probably stronger ones, or kind of better trading stocks, if you like, from my perspective. But either way, we'll be watching it, see if it sets up. If I take it, don't take it, I'll be analysing feedback from the markets, green light, red light, and all of that. So INSP, this is the last biotech stock that we'll be taking a look at. Let's go on to the weekly chart. What chart pattern can you see? Well, you could look at it as a cup and handle, you could look at it as a VCP as well if you start your base from here. So you got 1 contraction, you got 2 contractions, and then potentially building a 3rd contraction up here. Take a look at the RS lines versus the market versus the stock zone industry group. Consistently high sales. You got 1 high quality growth fund increasing, 1 marginally decreasing, the other 3 are just flat in there as well. But you do have 5 high quality growth funds. That's usually a good thing, not a bad thing. And then you could look at this as well, potentially building this big base, starting to tighten on the red line there, which is the 10-week. So again, just watching and waiting for that trigger bar to form as per my criteria. If you haven't already, there I have an online model book that has thousands of stocks. So if you hear me talking about trigger bars and you're not too sure what trigger bars are, you can go and look at my online model book. You can look at it for free as well for 7 days if you really want. So let's go into some oil and gas stocks. So what it's somewhat reminding me of is late 2021, because you had some of the big boys in the sector, your ExxonMobils, your Chevrons, etc., building some decent bases, and that's this period in time here. Then they start to get really tight, putting in trigger bar weeks. So you see how the volume dries up in here, see how tight it is, see how it's clustering on key moving averages, and then this here was a bit more of a cup and handle with a bit of a low handle. You see that? Bit of a low handle forming in here. So now it's starting to look interesting as well. Why? Because price is beginning to tighten up around this red line, which is the 10-week. See how the volume has been drying up. Fidelity, big old boys. Does it look like they're decreasing their position? It doesn't look like it at the minute in terms of the reported data that we have. They initiated their position in March of Q1 of 2022. They then added in the 3 subsequent quarters. Looks interesting, doesn't it? And then you got these RS lines versus the market versus the stocks and industry group powering up on a short-term basis. You could look at this as a little cup and handle forming in here, or a decent sized cup and handle forming in here. The estimates, albeit they are down for 2023, it's been a real kind of step change for ExxonMobil and many oil and gas stocks. The earnings remain high, the sales remain high. They are going to be coming up against some pretty difficult comps on a year-over-year basis now, so that'll be interesting. But these oil and gas stocks, they still look pretty darn strong. Here's ExxonMobil on the daily chart, and you can actually then see a bit of VCP. So 1 contraction, 2 contraction, potentially 3 contractions here. So you're building higher lows in the base, starting to tighten up, volumes coming down a little bit, starting to look interesting, isn't it? So ExxonMobil, Chevrons of the world as well, they look pretty darn strong. This is trigger bar action, right? That's trigger bar action. Remember when I was just blabbering on about how they were setting up and tightening up? This is a type of action here. See how tight the price action is getting? That's what I'm looking for. See how the volume is just drying up there? That is what I am looking for. So VLO, this will be the final oil and gas one and the final one of this video. So VLO, let's take a look on the weekly first, and then we will go down. Fidelity in there again, initiated in Q2 of 2022, added in Q3, added in Q4 as well. Again, they're only buying for one reason: they think the price will go up. RS lines look good versus the market. versus the stocks owned industry group. Big breakout year in 2022. So you can see company went from earning $7, $5, losing $3 to $2 to $28, and then estimates for 2023 $20. But that is still, even though the estimates are then down, but the forward guidance is up versus 2022. It's a real step change in terms of prior years. And one thing that you could look at, right, is in 2018, okay, the company earned $7.35 a share, and the high of the share price was $126. So we're nearly 3x that for the 2023 estimates, but yet price is only $140. It's interesting, isn't it? So if it is going to be valued on similar multiples as it was in 2018, potentially 2019 as well, that is interesting, isn't it? Now, I'm not a fundamentalist. I'm not a valuist. I'm not a PE guy by any stretch of the imagination. But I just think that there is interesting. Do with it as you like. Volume is starting to dry up. RS line's good. You can look at this here as potentially a big old base forming, building some higher lows in there. Now, for me, on a short-term basis, looks a little bit kind of extended here, running up somewhat. So when we get down to the daily chart, see how this is wedging up here into overhead resistance. So overhead resistance being here, overhead resistance being in this vicinity as well. So what am I looking for? That kind of tight final contraction. So let's just hypothetize, is that right? Let's just do a hypothetical scenario. There's a better word than hypothetical. I can't remember the word. It's still quite early in the morning, all right? Anyway, look at this here. See how we're building these higher lows in the base, but short term extended here. RS lines look pretty good. So if it can tighten up around 140, I would like, for an oil and gas stock, I would actually like the 10 EMA and the 21 EMA to be there just underneath the trigger bar. So that's going to be this pink line that you see, and also this green line here. So if price can just kind of go sideways, little Davis box action around 140, that there could look of interest to me. So that's it, guys. We'll wrap it up there. Hopefully you found that video useful, and I will see you in the next one.